So to kickstart our event, I'd now like to invite Ms. Julia Leung, Chief Executive Officer of the Securities and Futures Commission, to the stage to give her welcome remarks. Please give Ms. Leung a warm welcome.
The Honourable Mr. Paul Chan, Eddie, distinguished guests, ladies and gentlemen, good morning. Good morning to a very rainy Wednesday. In Chinese saying, rain is water, water is money, and money is liquidity. So we all love that. On behalf of the SFC, the HKMA, and the Academy of Finance, let me extend to you a very warm welcome to Hong Kong and to this third day of the forum, the Investment Summit. We're most delighted to host you here and explore how to sail through changes. This Connect Hall provides the perfect setting for today's forum. I want to tell you a bit about its history. The venue used to be the bustling trading hall of our stock exchange since 1986. At its peak, hundreds of trading desks were arranged in concentric circles, and nearly 1,000 dealers were donning bright red vests jostled on red carpets. This is also hundreds of enterprises strike the iconic gong to set off their listed journey. When the last trading desk walked into history 7 years ago, the trading hall was given a new name, a new life in this Connect Hall, which is named after the Stock Connect program between the mainland and Hong Kong stock exchanges. And only 2 days ago, we were here celebrating the 10th anniversary of Stock Connect in this very hall. For the Hong Kong market, the past decade has been a remarkable journey of transformation into a super conduit of capital between mainland China and the rest of the world. So good old memories aside, I believe this hall embodies the irresistible changes and forces of change that constantly drive our capital markets forward. In global markets, the many forces of transformation have continued to reshape our market practices, growth strategies, and also regulation. As leading investment managers, you have a knack for identifying evolving market trends to stay ahead, seize opportunity, and keep both your firm and your clients out of harm's way. And my job as a regulator shares a similar purpose: to adapt to the shifting landscape through an agile and proportionate regulatory regime. So let me just check off a few forces of change in the investment landscape. First, innovative technology is sending the financial industry into a blue ocean of endless possibilities. Algo trading, machine learning, and AI language models combined are reshaping front, middle, and back offices function, including sales, research, client communication, and compliance. You can put in this bucket the nascent wave of tokenization that allows all of primary issuance, transfer, ownership, and record-keeping of traditional financial products to be done on-chain at near atomic speed. Second, the rise of passive funds versus active funds has continued. Over the past 9 years, passive funds have attracted more inflows than active funds. For the first time, total assets in US passive mutual funds and ETFs have surpassed those active ones this year. This trend is also turning a bright spotlight on the vulnerability of investment concentration in the biggest corporations, where popular trades drive up their market caps and hence market index weighting. This creates a positive feedback loop. Once these popular trades unwind, the swing could be unforgiving. Third is the rapid growth of private market on the back of a more regulated banking market. Estimated assets under management for global private capital are as high as $14 trillion, which triples from a decade ago. It's growing the fastest in the US, followed by Europe. In Asia, its growth has been slower, which means greater upside potential. We think private credit should be supported as an alternative form of financing for enterprises and projects with a longer investment horizon. But there should be adequate transparency, liquidity risk management, as well as more data reporting. Then there is climate change, transition finance, and the list goes on. But my last point is that we are living in an era of predictable unpredictability. Thanks to technology, algo trading, and index investments, today's markets are far more concentrated, moving greater amounts of funds at faster speed across more diverse asset classes and geographies. Throw into this mix geopolitics and Trump 2.0. We know the supply chain disruptions, trade disputes, and military tensions in the past few years are not an aberration. Uncertainty and market volatility are the new and only certainty. Coping with the flux of this new era is akin to bracing for the trials and tribulations of a triathlon, arguing the most toughest sport. Unlike a 100-meter dash, a triathlon, which brings together swimming, cycling, and running, requires more grit than sheer power and speed. The triathlete must go the distance and overcome every obstacle along their way, be it torrential rain like today, tidal changes, or treacherous slopes. Hence, we must think and train up like a triathlete for agility, strength, and resilience to sail through the changes of our times. So thank you very much, and here we shall begin.